Okay, good morning again. How are you doing today? I hope everything is fine. Okay, so this time we are going to discuss the adjusting entries. And our objectives are the following. Remember, by the end of this lesson, you should be able to, number one, recognize and analyze required adjustments. Number two, prepare adjusting entries. And the last is value accuracy in performing adjusting entries. In our accounting cycle, you have done collecting source documents, verification of source documents, analyzing business transactions, journalizing or recording the transactions, posting to the ledger, and preparation of trial balance. For today, we are going to discuss how to prepare the adjusting entries. And this is part of your accounting cycle. After the preparation of trial balance, you can also use the worksheet. The worksheet is a tool used by the accountants to facilitate the preparation of financial statements. So after the preparation or recording the adjusting entries in your journal, you can post it to the worksheet in order to prepare the adjusted trial balance. And once you prepare your adjusted trial balance, you can now prepare the income statement, balance sheet, and other financial statements. Okay, that is the accounting cycle. And then, um, next to trial balance is what? Again? Yes, adjusting entries. And that will be our topic for today. Let us proceed to this activity. This is our activity 1. Direction. Arrange the jumbled letters to identify the following statements, and you have to write your answer on the blank. Number 1. It is a systematic allocation of the depreciable amount of an asset over the useful life. What is it? Okay, look at the jumbled letters. Okay, what's your answer? Yes, Paulino? Okay, that's correct. Depreciation. Very good. This is depreciation. Now, what are those assets subject to depreciation? Look at the picture and you can give the answer. Yes, building. Okay, how about the land? Is it subject to depreciation? No, land is not subject to depreciation. Another example of assets that are subject to depreciation aside from building. Yes, very good. Machineries, vehicle, that's correct. Thank you. Very good. Yes. Number 2, it is the revenue earned or recognized by a business for which the invoice is yet to be billed to the customer. It is also known as unbilled revenue. What's your answer? Yes, Ronald? Very good. That's correct. The answer is, yes, very good. The answer is accrued revenues. Number 3, sometimes referred to as deferred revenues. It is a payment received by a company from a customer for products or services that will be delivered at some point in the future. What's your answer? Yes, Martin? Very good. The correct answer is unearned revenues. Unearned revenues. So the service will be rendered later, or the goods will be delivered to the customer, but we receive the payment already. Okay? Next is number 4, payments for goods or services that will be received in the future as the benefit is realized or as the expense is incurred. It is recognized on the income statement. Your answer is yes, Paulino? Again? Yes, prepaid expenses. And the best example for that is the insurance premium paid to the insurance company. Number 5, those incurred for which there is no invoice or other documentation. They are classified as current liabilities and appear on the company's balance sheet. What is it? Yes? Again, Martin? Very good. The answer is accrued expenses. The answer for number 5 is accrued expenses. I'm so happy that you answered the questions correctly. Congratulations, my dear class. Here is the definition of adjusting entries. They are the entries made prior to the preparation of financial statements. As I have told you a while ago, this is to be made prior to the preparation of financial statements. Why? In order to update certain accounts so that they reflect correct balances as of the reporting period. And these adjusting entries are usually prepared at the end of the reporting period. Kung kailan ka gumagawa ng financial statements, like for example, June 30, 2021 or December 31, 2021. Let us discuss the purpose of adjusting entries. Definitely, our number 1 purpose is to take up unrecorded income and expense of the period. It is very important that you have to bring up to date the financial statements. So the account should be updated when it comes to income. Okay, is it already earned? Okay, how about the expenses? Even though the bill is not yet received, you have to ask, like for example, the water service system, to provide the data as to how much will be the payable. Because actually, those bills are forwarded or delivered to us next month. Like for example, you are preparing the financial statements as of December 31, but the bill of water is to be delivered by the personnel by January. So you have to communicate or ask them to provide the data so that you can record or recognize those expenses. Number two is to split mixed accounts into their real and nominal elements. And I think you still remember what are the meaning of real accounts and nominal accounts. Okay. The three types of accounts. Number one, real accounts or permanent accounts. These are accounts that are not closed at the end of the accounting period. These accounts include all balance sheet accounts except the owner's drawings or withdrawal accounts. So, the permanent accounts or real accounts are, again, balance sheet accounts, and they are always found in the post-closing trial balance. Number two, nominal accounts or temporary accounts. They are accounts that are closed at the end of the accounting period. These accounts include all income statement accounts and drawing accounts. These accounts are usually close to the income and expense summary. And number three is mixed accounts. They are the accounts that have both real and nominal account components. These accounts are subject to adjustment. So, paghihiwalayin ang halimbawa ay income and what? Liability. Paghihiwalayin ang assets and expenses. Mixed accounts exist when the original entry was recorded in any of the methods. So, we have income or liability method, and expense or asset method. The entry made at the time of receipt of cash under either income or liability method, and the entry made at the time of payment of cash under either expense or asset method. Why adjusting entries are necessary? Who can answer? Why adjusting entries are necessary? Yes, Dom? Correct. That's correct, Dom. So, adjusting entries are required at the end of its accounting period so that a company's financial statements reflect the accrual method of accounting. We can apply also the double entry system. That's why it is one of the common characteristics of adjusting entries that every adjusting entry will involve at least one balance sheet account and at least one income statement account. Another is that adjusting entries are usually dated as of the final day of the accounting period. Like for example is June 30 or December 31. Therefore, if a required adjusting entry is omitted, both the company's balance sheet and its income statement will not report the correct amounts. That's why we are preparing the adjusting entries every final day of the accounting period. What else? Yes, every adjusting entry must have a debit amounts equal to credit amounts. That's why we use or we apply the double entry system. And remember class that in adjusting entries, no cost is involved. We are not using the account cost in adjusting entries, except for sometimes in the bank reconciliation statement. But it is for book purposes, for booking purposes only. There's no actual cash transaction in adjusting entries. Okay, will you please read the following item 1 to 7? Very good. Okay. Number 1 is draw 2 T accounts. Since every entry requires a minimum of 2 accounts. So that is number 1 procedure. Number 2, indicate the account titles and the horizontal part of each T. For every adjusting entry, there must be a balance sheet account and an income statement account. Enter the balance prior to the adjusting entry in each of the T accounts. Usually your original entry. Number 4, determine the correct ending or final account balance for the balance sheet account. Record the adjustment so that the ending amount in the balance sheet account is the correct amount from step 4. Enter the same adjustments or adjustment amount into the related income statement account. And lastly, write the adjusting journal entry. And where are you going to write your adjusting entry? Definitely in the general journal. Now, let us discuss the accruals. Another term for accruals is what? Accrual type adjusting entries. So, this refers to the adjusting entries that must be recorded prior to issuing the financial statements. Why? Because a business transaction occurred, but it is not yet recorded in the company's general ledger. So, it is a must to record this before you prepare the financial statements. Let's discuss first some examples of accrued expenses. Okay, who can give an example of accrued expenses? Um, think of a bill or expenses in your family that you can consider it as an accrued. Yes, Shaira? That's correct. Electricity bill. What else? Water bill. What else? How about in business? Yes, Paul? Okay, very good. Wages of an employees. Very good. What if the company fails to adjust? What will happen? Yes, without the accrual adjusting entries for the expenses that you have mentioned a while ago, the company's balance sheet will report too little in liabilities and too much in owner's equity. And therefore, the income statement will report the incorrect amount of expenses. This means that expenses is understated and the income is overstated. That will be the effect if the company fails to adjust. Last, look at the table. We have two columns, balance sheet accounts and income statement accounts. We have the account title in the balance sheet. We have interest payable and it is classified as liability. And once you fail to recognize the liability, it follows that the expense is not also recognized. Therefore, the financial statement is incorrect because the balance sheet is understated by the amount of interest payable and the income statement is also understated by the interest expense. That's why the income is overstated because the interest is understated. It follows in our salaries payable and utilities payable. Pag ito ay hindi na-adjust, ibig sabihin, nag-render ng service ang ating empleyado, hindi pa natin nababayaran, and then, hindi natin na-recognize yung expense na yun. Halimbawa ay December 16 to December 29 kasi ang pasok lamang ay hanggang December 29. And your reporting period is December 31. So, mali na agad ang amount ng magre-reflect sa balance sheet at sa income statement as far as salaries payable and salaries expense are concerned. Same with utilities. Kasi alam naman natin na laging huli ang pagsiserve ng mga bills. Hindi yung kung kailan mo na konsumo, kasi babasahin pa siya and then ibibil, then saka pa siya i-distribute sa mga agencies or sa mga bahay. And then, how about the interest receivable? It is considered as an asset, classified as asset. Therefore, the interest income is likewise understated. So, iba na rin ang presentation mo sa iyong balance sheet at income statement. Kulang na ang interest income na na-realize at ang receivable mo, which is asset, ay understated na rin. To continue, let us discuss the prepaid insurance, supplies, and deferred revenues. Prepaid insurance is classified as asset, and then the expense is insurance expense. But last, we have two methods in recording the prepayments. So it depends upon the first or your original entry. So meaning the asset account may be over or understated depending upon the method of recording your original entry or upon payment. What is your method? Now, about supplies. Sometimes the company uses the asset account and expense account. So it also depends upon the situation. How about the deferred revenues and the revenue? It depends also if you treated it as deferred revenue or the liability or the outright you charge it to revenue. So we will discuss later how to apply that method. Example of accrual entry. On the final day of the accounting period, ABC Company had an emergency repair of its machinery. The repair shop told ABC Company that the repair will be the amount of 6,000 pesos and that an invoice will be sent within a few days. Before the financial statements are distributed, the company must record an adjusting entry to accrue the 6,000 pesos expense and liability. In this case, what are the two accounts affected in this transaction and what amount is involved? So, yes, expense and liability. That's correct. Very good, Reggie. The journal entry will debit 6,000 pesos to repairs expense and will credit 6,000 to accrued expenses payable. Without this adjusting entry again, the income statement will show net income which will be too high and the balance sheet will report liabilities which will be too low and owner's equity which will be too high. So that will be the effects or effect if the company failed to accrue the transaction that was presented. To recap, the entry would be debit repairs expense 6,000 and credit accrued expenses payable 6,000. What is the explanation? To accrue the cost of repair expenses. And this is recorded on the day or the final day of the reporting period. Let's move on to deferrals or deferral type adjusting entries. This refers to the adjustments necessary because an amount that had already been recorded in the general ledger pertains to several accounting periods, including the current accounting period. These are the items that have been initially recorded as liabilities but are expected to become income over time or through the operations of the business. As I have told you, we have two methods of initial recording of income. Number one is liability method. Under this method, cash receipts from items of income are initially credited to a liability account. At the end of the period, the earned portion is recognized as income while the unearned portion remains as liability. The other one is income method. Under this method, cash receipts from items of income are initially credited to an income account. Then, at the end of the period, the unearned portion is recognized as liability, while the earned portion remains as income. Last, please get one whole sheet of paper and your pen, and then you're going to prepare the adjusting entry following the procedures you have read. Your, your problem will be this. On December 1, ABC Company paid 6,000 pesos for the cost of its property insurance for the 6-month period beginning on December 1. You will be given 10 minutes to do this activity. Time's up. Now class, you are required to submit your output in our Google Classroom. So I will give you some hints in our activity. Remember that on December 1, the company paid 6,000 pesos for the cost of its property insurance for the 6-month period beginning on December 1. So that is our problem. So remember that the entire 6,000 was charged to the asset account or prepaid insurance. So the company will be using the asset method. On December 31, the end of its accounting period, an adjusting entry will be needed to move 1,000 pesos. That is 6,000 pesos divided by 6 months from prepaid insurance to expense. For our deferral entry on December 31, debit insurance expense 1,000 and credit prepaid insurance 1,000. That is to record the deferral of insurance of property. Remember class that insurance expense will be debited for 1,000 pesos and prepaid insurance will be credited for 1,000. And that is the entry. After the December 31 adjusting entry, the asset account prepaid insurance will have a debit balance of 5,000 pesos. Therefore, in each of the next 5 months, a deferral adjusting entry is needed to debit the insurance expense for 1,000 and to credit prepaid insurance for 1,000. Now, class, you are required to submit your output in the Google Classroom. For those who can turn in to the Google Classroom, you may submit it via Messenger. You can send it to your teacher, Mrs. Macaria P. Manguera. Let me give you an example. On February 15, 2000 X2, Ovido entered into a contract with Makisig to maintain the computers of Makisig for 2 months starting on February 15, 2000 X2 to April 15, 2000 X2. On the same date, Makisig paid the total contract amount of 40,000 pesos in full. Here is the presentation for our second problem as an example. Under the liability method, to record the initial transaction wherein the company received 40,000 cash in advance on February 15, 20x2. Under the liability method, debit cash 40,000, credit unearned service revenue 40,000. How about in income method? Debit cash 40,000, credit service revenue 40,000. And let us move to adjusting entry on February 28, 20x2. Debit unearned service revenue 10,000 and credit service revenue 10,000. So what is the effect? How much will be the unearned service revenue on February 28? So the initial is 40 for credit and another debit of 10,000. Therefore, the balance is 30,000. How about in income method? The service revenue was credited upon receipt of cash. And then on the adjustment on February 28, there is a debit of 30,000. Therefore, it follows that only 10,000 was realized, and that is from February 15 to February 28. Look at the presentation and how we arrive at under the liability method. So, we have to prepare the accounts. Okay? And then, we're going to what? we're going to record the initial transaction. And that is on February 15 of 40,000. Okay. Unearned service revenue is a liability account. Therefore, here is 40,000 credit because the cash is debited. Okay? And then, on February 28, we have 10,000 for our unearned service revenue. And then, we are going to use the service revenue of 10,000 on February 28. Therefore, it follows that the service revenue is 10,000. And look at the liability account, which is unearned service revenue. So we're going to get the balance. Here is it. Okay. Did you get it? Can you follow? That the unearned service revenue or the liability has an ending balance of 30,000 on February 28. Okay, and look at the service revenue account, the account. We have a credit of 10,000. Very easy, right? If you can follow the step-by-step procedure. Okay, here's the matrix. Okay? So, pinakita ko dito, class, ang mga timeline. Okay? So, all in all is 2 months. 1/2 in February, 1 month in March. Did you get it? And 1/2 month in April 2000X2. Okay? Very interesting, right? Appreciated ba ninyo? Now, let me illustrate the income method. So again, you're going to prepare to the accounts for service revenue and unearned service revenue. Okay. So consider the balance of 40,000 as our income in our service revenue of 40,000. And then that is recorded on February 15. Now, let us consider the adjusting entry for February 28. So, the amount of 30,000 will be debited in order to arrive at the correct service revenue as of February 28. Okay? So, it shows that the service revenue of 10,000 was realized, and that is covering period February 15 to February 28. And therefore, it shows that the unearned service revenue is 30,000. Because before, on February 15, only the account service revenue was used. So in order to adjust, we are going to use another account, which is unearned service revenue, to split the service revenue of 40,000. Okay? Then, let me show you the illustration. Okay. So, February 15, 2020 until February 28 is considered 1/2 month. That's why 10,000 ang amount. And then, for our March, we have, for the whole month of March, it is 20,000. Okay, 20,000. And then, for April is 10,000. So, this amount, 10, 10, and 10 is equivalent to our unearned service revenue of 30,000. Therefore, sa reporting period natin na March 31, we are going to use the amount of 20,000 because it is for the whole month. Okay? So, can you follow, class? Did you get it? Okay, very good. Number 3, prepayments. Assume that on December 1, a company recorded its 4,800 pesos payment for 6 months of property insurance for December through May. At December 31, 1 month of the insurance cost, that is 1/6 of 4,800, has expired and should be reported on each December income statement as insurance expense of 800 pesos. The remaining 4,000 of unexpired insurance, 5 months times 800, must be reported on the December 31 balance sheet as a current asset. As such, prepaid insurance or prepaid expenses. In effect, the expired cost of 4,000 pesos is being deferred until it becomes insurance expense in January through May. All of this will be achieved through a series of deferral adjusting entries. Let's take up first the asset method in recording of expenses. So class, under this method, cash disbursements for items of expenses are initially debited to an asset account. At the end of the period, the incurred portion or used up or expired is recognized as expense, while the unused portion remains as asset. Will you please read silently? Okay. Now, the second method of initial recording expenses is the expense method. Under this method, cash disbursement for items of expenses are initially debited to an expense account. At the end of the period, the unused portion or not yet incurred or unexpired is recognized as asset, while the incurred portion remains as expense. Example, on February 19, 20x2, Uwido purchased 6,000 pesos worth of office supplies on account. Plus, when we say an account, this means that umutang muna sa supplier ang company. At the end of the month, 2,000 pesos worth of these supplies are still unused. The February 19, 20x2 entry to record the purchase and the account of office supplies was already posted to the general ledger and included in the balances as shown in unadjusted trial balance. Plus, what do you notice in my presentation? Yes, we have the portion for asset method and expense method. So, on February 19, 20x2, Uwido purchased 6,000 pesos worth of office supplies and account. Therefore, we're going to credit the accounts payable. But under the asset method, I use the office supplies for the amount of 6,000 pesos. While in the expense method, I use office supplies expense. Please take note of the difference. Office supplies and office supplies expense. Now, let's proceed to the February 28, 20x2 for our adjusting entries. Under the asset method, the account to be debited should be the office supplies expense. For how much? Because in the problem, it says that 2,000 pesos worth of office supplies remains unused. Therefore, in order to arrive at the 2,000 pesos office supplies, we have to credit the office supplies for 4,000. And this means that 4,000 is used already as of February 28. Did you get it, class? Any question? Okay, very good. Now, under the expense method, what happened? The office supplies was debited to 2,000 to prove that there is an unused amount of 2,000 pesos. So, there is entry that 2,000 pesos be debited for the office supplies account and then to credit the office supplies expense because it is 6,000 that was recognized as expense under the expense method and you have to reduce it by 2,000 pesos to, to see or to show that 4,000 was used up already. Under the asset method, of course, we have to make two the accounts such as office supplies and office supplies expense. Now, remember that on February 19, we have a debit balance of 6,000 pesos. And it says that the amount of 2,000 is determined to be unused after the physical inventory count. So we have to adjust it. On February 28, 2002, we have to prepare the adjusting entries as debit for office supplies expense 4,000 and credit office supplies 4,000. So we have to get the difference between the debit of 6,000 pesos and 4,000 credit in the T account office supplies. So what did you get? Yes, very good, 2,000 pesos. And under the given problem, the amount of 2,000 is determined to be unused. So this is the balance as of February 28, 2000 x2. As simple as that. Okay. Under the expense method, Of course, we have to prepare also two T accounts, office supplies expense and office supplies. So please remember that on February 19, 2000 X2, the balance is 6,000 pesos. So it was indicated in the problem that the amount of 2,000 pesos is the ending balance of office supplies. So since the method is expense method, we have to adjust. So we have to debit office supplies of 2,000 on February 28 and a credit of office supplies expense 2,000. This is in order to reflect that the amount of 2,000 pesos is unused. So, let us get the difference between the debit of 6,000 pesos and 2,000 pesos in the office supplies expense. So, what did you get? You get 4,000 pesos, and this will be the amount of office supplies expense because 2,000 was still unused. Others include the recording of depreciation, bad debts, and adjustments for valuing some investments. Let's look at the table. So we have other adjusting entries for the balance sheet account and income statement account. Here are some of the account titles. Under the balance sheet, we have accumulated depreciation and allowance for doubtful accounts. What are these? These are contra asset accounts. This will be deducted from the respective, like for example, in accumulated depreciation, it will be deducted from the property, plant, and equipment. How about the allowance for doubtful accounts? This will be deducted from accounts receivable. So, in the property, plant, and equipment, the difference will be called net book value. And for the receivable, the difference will be the net realizable value. So, what are the expenses for the income statement purposes? Depreciation expense, yes, and bad debts expense or sometimes doubtful accounts. So here is the example under other adjusting entries. The office furniture and fixtures amounting to 100,000 pesos with a salvage value or scrap value of 3,000 pesos and estimated useful life of 5 years was acquired last December 1, 20X2. We're going to prepare the adjusting entry as of December 31, 2000X2. Do you still remember how to compute the depreciation? Okay, very good. So, we're going to determine first the acquisition cost, which is 100,000 pesos. And then we are going to deduct the salvage value of 3,000 pesos. After that, you are going to divide all over 5 years. But since it is acquired on December 1, 2000X2, you're going to divide it by 12 to get the depreciation for 1 month. So what will be the entry? On 20X2, December 31, we have to debit depreciation expenses 1,616 pesos and 67 cents and allowance for depreciation, office furniture and fixtures. remember that you're going to add what will be the property, plant, and equipment account title, which is allowance for depreciation, office furniture, and fixtures, because we have many property, plant, and equipment. In order to determine what specific allowance for depreciation it is. As simple as that, class. Did you get it? Any questions so far? Okay, very good. I'm happy that you are participating in our discussion. This is our activity 4. You're going to group yourselves into 3. But remember, consider your talents and interests in joining the group. 3 rooms will be assigned for you. You're going to present your output after 15 minutes. Number 1 will be the group of poets. You're going to compose a poem regarding the adjusting entries. Okay? Group 2, group of video makers. Create a short video containing the adjusting entry for the provision of doubtful accounts. You're going to discuss it. And then number 3, group 3, group of singers and composers. You're going to compose a song regarding adjusting entries. And then you're going to present it by group. Here is the rubric for poem. Cohesiveness. You are excellent if the poem goes perfectly together. There is unity between lines and stanzas which connect with the topic. Average if the poem somewhat goes together but needs more cohesiveness. The poem's lines and stanzas sometimes sway from the topic. Poor if the poem does not go together. The poem's lines and stanzas sway from the topic. How about for the use of the poetic elements? Excellent. The poem uses 3 or more poetic elements to enhance the poem and the reader's emotion. Average, the poem uses 1 or 2 poetic elements, but they sometimes distract the reader. Poor, the poem uses no poetic elements. Rhythm, excellent if the poem uses rhythm throughout, which benefits the poetic tone. Average, the poem sometimes uses rhythm, but may waver in a way that distracts the reader and negatively affects the tone. Poor, the poem does not have any noticeable rhythm. And for the creativity, you are excellent if the poem uses 3 or more unique metaphors and similes to describe situations, objects, and people. You are average if the poem uses 1 or 2 unique metaphors and similes to describe situations, objects, and people. And poor if the poem does not use unique metaphors and similes. Here is the rubric for song. Please read and understand so that you will be properly guided. Then, here is the rubric for video creation. You are going to read this and understand. So we have exemplary, proficient, partially proficient, and incomplete. Class, thanks for sharing your talents. I appreciated it so much. Very good, and congratulations. Now, how do you feel while you are doing your task? Okay. Did you enjoy the lesson today? Okay. What did you learn today? Yes. Okay. How about the others? Amazing. I am happy to hear those reflections, my dear class. By this time, please get 1/4 sheet of paper and your pen and answer the 5 questions. Okay. Are you ready? Now, number 1. Technically, this refers to entries prepared prior to the preparation of financial statements to update certain accounts so that they reflect the correct answer or balances as of the designated time. A. Adjusting entries. B. Updating entries. C. Correcting entries. D. Original entries. Write your answer in number 1. Okay. Number 2. Which of the following is most likely not considered an adjusting entry? A. The accrual of an electricity bill for the electricity used but not yet paid. The recognition of depreciation expense for the period. Letter C. The recognition of the use and unused portion of a prepaid rent. Letter D. The entry to record the collection of interest receivable. Write your answer in number 2. For our number 3, which of the following is most likely considered an adjusting entry? A. The entry to record the payment of interest receivable. B. The entry to record the collection of accounts receivable. Letter C. The entry to record the purchase of equipment. Letter D. The entry to record bad debt expense for the period. Write your answer in number 3. Number 4. The term accrual as used in accounting means A. To record an income that is already earned but not yet collected. B. To record expense that is already incurred but not yet paid. Letter C. To record the collection of income or the payment of expense. Letter D, A, and B. Write your answer in number 4. Number 5, the last item. The term deferral as used in accounting means, letter A, to split the earned and unearned portions of an advanced collection. Letter B, to split the expired and unexpired portion of prepayments. Letter C, to record the collection of income or the payment of expenses. And letter D, A, and B. Now, exchange your papers and let's check your assessment or test. Okay, did you get the same answer? Number 1, A, and from number 2 to 5, letter D. Who got the perfect score? Oh, amazing! All of you got the perfect score? Congratulations, class! For your assignment, please copy this in your notebook. Number 1, Entity A issued a 12% 200,000 pesos note payable on November 1, 2000 X1. Entity A uses a calendar year period. The principal and interest on the note are due on November 1, 2000 X2. What is adjusting entry on December 31, 20X1? Please show your computation. Number 2, the total accounts receivable is 98,000 pesos and the top management determined that there is a provision of 2% as doubtful accounts. Give the adjusting entry. Class, thank you very much for your active participation for today's lesson. Please keep safe. Don't forget to wear your face mask. Sanitize your hands from time to time because COVID-19 is still here. Bye, class.